Good morning, everyone, and thank you for joining us on Morning Markets today. Follows on from a bank holiday here in the UK yesterday, but certainly not a market holiday when we look at what and how equity markets and bond markets behaved on Friday and indeed yesterday in both Europe and the US. Really, that challenging end to the month is something that we can see with how equity markets in particular performed on Friday and then again yesterday. That's very much due to the comments made by Fed Chair Jerome Powell at the Jackson Hole Economic Symposium. We talked a number of times last week about how the market was focused in on what we would hear from Powell, and certainly on Friday in the US, the market and the equity market did take a little bit of fright from some of his comments. I'd maybe caution that really his comments were very much aligned with those that we've heard from a number of other Fed speakers in the run-up to the symposium. In particular, the need that maybe the market was pricing too aggressively the turn in US monetary policy and maybe the peak of US interest rates. Certainly things that other speakers have been pushing against last week, and indeed Jerome Powell really just reiterated that we will need to see inflation quelled. The best way to do that is to continue to raise interest rates, acknowledging that monetary policy has to become restrictive with the implications that that may have for the employment backdrop. And that's an important point. Employment or unemployment may trend up, but really we are coming at that from very low levels. Indeed, record low unemployment, very high vacancy rates post-COVID. So that's an important point to remember there in the background. I think the other thing to comment on was really just the follow-through then that we saw with both the S&P and the NASDAQ on Friday down over 3%. We saw that feed into Asia and Europe certainly yesterday, and we will wait to see today how that impacts UK markets when they open. But certainly one would expect maybe a slight decline there as we look forward to today. Different reaction probably in currency markets and bond markets, much more muted than that which we have seen in the equity market. And that really speaks to just this ongoing volatility that has been a theme for asset markets through the course of this year. That's certainly not going to go away, given just that policy mix and the challenging policy mix that there is in the backdrop in terms of rising interest rates, inflation still remaining elevated, and also how that feeds through into other policy reactions. The other thing just to focus in on today, areas of strength in both the US and the UK market of late have certainly been housing. We get an indication in the US in terms of housing price trends, and that's important because that feeds into owner's equivalent rent, but think about that as rental that people have to pay. That feeds through into that with a lag. Here in the UK, we have mortgage approvals data, which is usually a good indicator or a good leading indicator of future direction of the UK housing market. Both things we'll look to comment on tomorrow. Please do join us again then. Many thanks. If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.